Okay, folks, we're looking at the Bitcoin market, and I got a ton of emails because I'm taking a hiatus from Twitter to give me an opportunity to sit with you for a moment and discuss the Bitcoin market. Obviously, we're a short distance away from the 20K level. Before I go into this, if you're new to this channel, it would be best if you went to Twitter and scrolled through back before we had this run up in here. I had discussed a lot of the movements here on the upside. I called 20,000 right before 20,000 at 19.7, 19.8. I said that we would not see 20,000. We would go to 6,000, 5,000, 3,000, 2,500, and recently I've said that we would see Bitcoin $100. And I've obviously ruffled some feathers with this call, but essentially what I'm stating is that all of this price action back here, okay, we're going to go below all that. This is all mania, which is typical of like a penny stock euphoria. It's just total absolute mania. Now, again, I do not know very much about the crypto industry. I'm a pure technical trader. I don't look at anything from a fundamental scale unless it's a commodity or a stock. And Bitcoin is neither, so therefore I trust my read on price action, and I'll leave it to you whether or not I was right about all the turns in Bitcoin over the last year and a half or so. So let's move into a tighter view on Bitcoin. If I'm going a little too slow for you, obviously, but YouTube has a function where you can speed up the audio, and I found that you can get through my videos pretty quickly, around 1.5 times, 1.75. And if you're really into it, you can do 2 times the record speed. So please don't give me the comments I talk too slow, because I really don't give a shit. So there is a hope for this being support here. And we talked about how price was going to hang around that 6,400 level, and it did that for several months. We consolidated inside of a range that was defined on my Twitter feed, and then right after we saw a run up, which was this one right in here, I said that it was free to trade lower from that point on, and we did a little bit of consolidation around that 6,400 again, and finally it snapped lower. Every level of distribution very cleanly referred to on Twitter. We've been focusing on one side of the marketplace for Bitcoin. Now, I don't actively trade this. I just talk about it because my students are enamored by crypto, and for the lack of a better word, I'm a noob when it comes to crypto as a whole. But from a technical standpoint, like I said, I think I'm pretty much a dead ringer on all the moves that's happening, and it's because I understand the delivery of price. And there's a lot of folks that will state that crypto is the new thing. Okay, so all the old stuff goes out the window. No, it's not. It's the same stuff, and the things that make a market are going to be used in anything that trades. It's the same rule book. It's the same MO, if you will. So with that in mind, I've brought a lot of folks to the 3,000 level. Okay, and I'm just going to go over some of the things as to what led to this and what I think may transpire going forward that leads us to it. We're only, 242, 245 points away from it. So it's hanging around in here, building, in my mind, a hope scenario. I don't think we'll even see a bounce in here. I think it's just going to just give up the ghost and go lower. Now, below 3,000, we got 2,500. I like that level. I said this several months ago that I think 2,500 could give a bounce. Now, when I say bounce, we're not going to 10,000. Okay, we're not going to 8,000. I don't even think we'll probably see a run above 6. And the reason why is there's going to be a lot of short covering, a lot of traders that have joined the bandwagon in crypto, but on the bear side. I stated that once they put this market on a futures market and put a futures contract against it, the banks would kill it. And here we are. So I don't want to hear arguments about, this, that, and the other thing, and it's going to be the future. I don't care personally what it's going to be in the future. My only concern and interest in it is how is it trading. There's a lot of companies out there that have very, very low valuations in terms of what they are priced as a market, technically trading it, but they're worth tons and tons of billions, and it's not important, let's put it that way, to weigh those things out, because if crypto is going to be the future, we're still in the infancy of it. And I don't think Bitcoin is going to be the one thing that remains. I think ultimately it will be phased out and something will be put in its place that's going to garner the trust, if you will, of traders that have lost their trust in it, because I have family members that have lost money in this. How Bitcoin and crypto is going to replace all of fiat currency, and it's, we're going to upset the establishment. And I'm going to just plainly tell you that's not happening. Okay, so the world is ran by these banks, and you're not going to unsettle them, and you're just not going to sit down one day and say, well, I'm going to create my own currency, and it's going to replace all the world currencies. It doesn't work like that. Okay, every war around this world, okay, is ran and start and funded by banks. And if you don't understand that, you dig deeper into history and get to the facts. So if these same entities are in operation on all levels of asset class, you really think that crypto is going to be that knight in shining armor? I'm going to side with the big banks, because they have all the military, they have all the influence, and they have the money, the real money. The digital stuff that is referred to in crypto, this past year has done more damage to the element of trust and visibility for the industry that is quote unquote crypto. Everyone was talking about getting rich. Everyone's going to be driving around in Lamborghinis. Well, it's December 2018. It's the 14th of December. Where's all the Lamborghinis at? Where's all that Bitcoin millionaires that we're buying and holding? I often ask those individuals that come at me on social media, where's those riches? And invariably they're going to say, well, they sold out here, they got this, they got that. And that might be true, but they're still selling that whole buy me, it's going to the moon, it's going to be 150,000 Bitcoin, whatever. Okay, I'm not here to kick sand into people that have bought into that bullshit and lost their money. I'm actually trying to remind you that I told you not to do those things and expected to go lower. And here we are. So if we look at a recent post I did on Twitter, if you go over to my Twitter feed, I gave an example of what I felt was going to be indicative of a run on stops and then a future decline. If you look at what price has been doing, it obviously is in consolidation, which is typical right before another move lower. There's accumulation of orders that are happening in here, regardless of it being crypto or not. There's a lot of noobs that have entered the marketplace as a quote-unquote trader using crypto, and maybe they saw a run up a year ago, and it makes them feel like they're informed and or plugged in as to what the market's going to do. And you see these guys on the social media, they're the godfather of technical analysis. Whatever, but they do not have faith in underlying market making concepts, and the reason why is because they don't know them. if we know that the likelihood is a devaluation on this currency, which is currently and has been for over a year now, been underway for all the cryptocurrencies, specifically Bitcoin. Now, I'm only going to keep my conversation germane to this specific crypto, Bitcoin only. All the other ones, they're all in the same boat, if you want to call it that. I've already said Ripple's going lower. I like 15 cents on Ripple. I think it's going to go there and just dash all the hopes of all those people that were swearing by God it's going to be, you know, the next bastion of new enterprise. I don't see it. I don't believe it. And, you know, I don't have any skin in the race. So what's important about that is I'm objective. I'm not hoarding something with an emotional commitment to it. I don't have hopes that I'm going to make money out of it. And I don't care if I'm wrong. But everything I've said, with the exception of one call made in August, I've been right about. So does that mean follow everything I'm telling you and believe me? No, I don't want you to believe me. I want you to be a skeptic. I want you to go through everything I'm stating here and test and see and weigh if what I'm saying is in fact the truth, and go back on my Twitter feed and see if what I've said was in fact what happened. That's all I'm asking you to do. Actually, you can do nothing. You can just turn this video off and say this is a bunch of shit and go about your way. And that's fine too. I'm not talking to you. I'm talking to the individuals that have asked me to do this. So when I look for price action to give me signatures that it's going to do one or another scenario, if I have an outlook or a template in mind, because I have several templates that I use that the market generally will follow. It's taught my mentorship, but if you look at this old low here, now obviously we've seen it trade to here, and the hope is, traditional support and resistance theory is, well, we bounced here before and now we traded here, so now it should go higher. That's not happening. Okay, it's going to go lower. The overall consolidation in here, what I like to look for is what was the move prior to the consolidation, and obviously without having to go to the left of the chart, we know it's been going lower. I look for ideal scenarios to support a retail-minded perspective. That means I'm looking for reasons to see where street money or less informed traders will look to take trades in the opposite direction. Because the narrative that's going to be sold to them is that this thing's going higher. Because the myth is that it's going to go to the moon eventually. Well, I don't know about that, but nonetheless, here's a supposed bullish trend line. Okay, we seen one move here. We found some would-be support, almost didn't get down to it. Found a little bit of support in here and rolled through. Now, I tweeted a chart on the 12th of December stating that if I ran price on Bitcoin, okay, if I was taking the role of a market maker for Bitcoin, I would give the scenario where they would show a break in the support, supposedly, of diagonal trendline support, which I have no faith in. I think it's all horseshit. It's too subjective, and there's so many lines that you can draw on there. It's foolishness. Okay, I mean, I know 15,000 people are going to come at me with, well, here, look at this trend line. This is where I made money. That's fine, but that's going to be an aberration. It's going to be one of those times where that's why the textbooks exist. Okay, there's going to be a few examples of this, but I don't have faith in it personally because the things I trade with are rather objective. They're very succinct. They're very direct. Okay, they're not gray areas to muddle with. It doesn't have, well, it could be this, it could be that. It's this. Okay, and one of the things that I like looking for is they give these little bounces off of these supposed lines, okay, and it paints a narrative in the retail-minded trader. They think this is support. So if they're going to be buying in here, where's their stop loss going to be? Right below the most recent low. Well, that's what I was showing in my diagram. A run below it, so it kills the buys immediately, and then gives the false hope that it wants to go higher by breaking above. But what it's really targeting is this little area right in here. See how clean that is? Real smooth. Anytime you see a level of price action where the tops of the candles are very uniform, that is going to be a trap. Okay, this is market making 101. This is exactly where the market's going to go. That's exactly what you see in my chart. A little hand drawn, if I controlled and ran price on Bitcoin, this whole move right here was that very moment. As price trades to this, I don't view that as a breakout to the upside. I don't see that as a continuation on the upside. And if you look at all the Twitter heroes, they're all excited at this point. Okay, prior to me doing my December 12th post about what I thought was going to happen, there's a lot of people that argued this point, but the ones that trust me, they all more or less expected something that's basically the same thing because of what I teach. I'll run on stops. What makes this powerful is we're looking for the underlying direction, okay? And this is not to do any kind of specific trend line. It's just reminding us that the overall institutional order flow on this asset, if you want to call it that, is bearish. Banks are selling the shit out of this. Okay, they're killing it. Whether you want to accept it or not, you can be fanboys for the rest of your life. I'm just telling you the cold hard truth. As soon as they put it on the futures market, I told everyone it's dead. They're going to kill it. And that's exactly what they've done. Now, argue with me all you want. Go on social media and get all the stupid shit that you want to post about, whatever you think. It isn't changing the facts. Bitcoin is going lower. So what I do is I draw up levels that I think are going to be probable in terms of downside objectives. Now, it doesn't mean it's going to stop at these levels. It's not to support a buying point, okay? And that's the other thing I want to talk about. When I go over things, I don't do like an A or a B scenario and come back to later on and see how smart I was because B didn't pan out and A did. I only stick to one narrative, and the narrative I talk about is the one that the market does. I don't look for outs. I don't do any kind of, well, here's plan B if it doesn't work that way. So that way I save face and build clout on social media. I only call one direction. That's it. I call one direction. I call a specific target. That's it. And my shit pans out. I don't know why anybody would sit there and listen to someone that has all of these squiggly lines, and if it does this, it's going to go up here. If it does this, it's going to go down here. There is a lot of that shit on Twitter. And to me, you're better off not looking at that. Because really what it's doing is, it's giving you something entirely different to look at, and neither one of them are building an idea in your mind of what you should do. In fact, you probably are looking at that chart or that person on social media with a preconceived idea about what you think is going to happen. And guess what? They've now introduced two other scenarios that you didn't expect, and neither one of them are likely to pan out. So now you have three ideal scenarios, right? They're all ideal. The original one you thought of, and the two other ones that this schmuck on Twitter wants to promote as theory. You're doing it wrong. And I'm not saying follow me. I'm just stating that if you're going to be a trader, if you're going to be developing, looking for other people's ideas or support around an idea that you may or may not have is actually going to be detrimental to your development. All I stated on Twitter as it relates to crypto is it's going lower, and I'll give you reasons why and when it should do it. Not if it does this, I'm going to buy it. I've never said I'm buying Bitcoin. I've remained bearish. I've never said those types of things except for one call in August. I suggested it could rally up if it did one thing. But then in that scenario, I didn't say, but if it doesn't go up, I'm going to do this. No, I said this would be a stop out and it would be a wrong transaction. It would simply be a loss. That's the difference between someone that understands how to trade and someone that wants to look smart or build clout. And that's usually where that same individual would never take the other side of the trade. They're siding internally with one of those perspectives that they've shared online. But they're never going to commit to the one that they're really siding with, or maybe even put a transaction behind. And I don't believe any of them really doing transactions either, not even on a demo basis either. So what are you left with? You're left with a decision of, Are you just watching this person because of its morbid curiosity that drives you to keep going back to their Twitter? Maybe that's the case with me. Or are you really getting something from it? Because if you're just getting a dopamine drop, well, you can get that somewhere else. And you should get it from your own experiences in trading. Don't support these Twitter heroes that are unproven. Because if they have all these A, B scenarios, okay, and they haven't really said this is the one that's going to pan out, that doesn't mean shit. It doesn't mean anything. It just means that these are hypothetical scenarios, and I have created an opportunity where I can be right in either sense. And just like a magician has a concept called a magician's force. If we were in the same room together, I could force a card on you about 70 different ways, and you would never know how I did it. They're all different, but it's the same concept. I'm giving you the card you thought you had a free choice of. If we're watching scenarios be presented by someone, okay, invariably what happens is the new trader or the noob or someone that's just really just feeling down about their inability to find consistency, they watch someone put these multiple scenarios up, okay? And what happens is one of them might come close to panning out. It might be very close to it. It doesn't really unfold exactly like they state or show in scribble lines. If it does this, it'll be a buy. If it does this, it'll be a sell. I can't stand it. Irks the shit out of me because that's not someone that understands what's going on. A trader doesn't make decisions like that. Okay? That's someone that's just talking about things. That's someone that just wants to look smart after the fact. Side with the market that's going to be most likely to be profitable, the direction that's going to happen in your mind. Side with that and stick with that. Don't give the double-sided narrative, okay? Because the noob will come back and say, wow, look at that ledge. Look at that guy. He's so smart. He's this, he's that. He's full of shit because all he did was let you decide in your own mind after the fact what you thought was all along his intentions or his motives behind doing it. Don't believe me? Go back and look at all that bullshit because that's all it is. Now, going on with presently what we see here, the market first has to give the notion and provide the evidence to the traders that it's going to move. Now, obviously, the institutional order flow is bearish. We understand that. When the market's in consolidation, what we want to see is a low be taken. And that's this one right here. Once the market breaks down like that, what that has done is upset the underlying sentiment during this consolidation. So here we have that supposed trend line, okay? And folks that were looking for this to provide support, they would have bought in here with the expectation of having a stop here or just below that, and or right below here, either scenario. But when they see this break in that supposed trend line, their bullishness is going to be tested. If their stop hasn't been hit, they're going to be thinking, okay, maybe I'm wrong. Maybe I need to change directions because I have to always be in the marketplace thinking like a retail trader. They may look at this and say, okay, well, I'm going to trade that retest of the broken trend line and I'll go short there and I'll use this safe spot here because this is clearly resistance. All this does is build a greater interest in this level to put liquidity in the form of a buy stop. That buy stop liquidity, or as I call it, a liquidity pool, that will build a willing base to sell into. Who wants to sell it there? Informed money. Like myself and the people that follow me, I tell them exactly where smart money will engage, why they're trying to get price there, because it's going to be an established effort to get it back below this low here. So right in here, classic market making strategy is you want to see a break lower first. Some kind of a narrative where it drops lower. It can be simply running on old low. I always like to look for a trend line. Not because I like trend lines to trade off of them, because what I'm doing is I'm taking the theory and the belief structure around trend lines and using it against and exploiting the retail-minded traders. I do it all the time, every single week on Twitter in Forex. I do it every single day just about on Forex. And this stuff repeats over and over and over again. And that's the reason why you have that high 90% likelihood that you're going to lose your money, because you believe in this bullshit. So right in here, if we have an unknown amount of buy stops. We don't know how much it is. I don't care. I don't need to know that. I had some guy, on Twitter say go over to BitMEX and you'll see that the crypto markets don't trade like that. Okay. If it's trading, it's going to do this. This is market making, period. Okay, nonetheless. So selling short here with some stop above here, we don't know how high it's going to go. Well, why don't you? Why don't you know how high it's going to go? If you don't know how high it's going to go, then you probably shouldn't take the trade. Above these equal highs is going to be a form of liquidity. It's going to be a bunch of buy stops. Why? Because you have traders that are already shorting here. They're going to trail their stop loss there, or they're going to see this trend line here, and then when they trade to it, they're going to put a stop loss right above that because they want a really, really ultra short, tight stop. Same idea. When we see that above these equal highs, all we have to do is look for the next level of liquidity to the left of it, and that's right in here, right in there. So now we have a range. We have this low here, and we have this high here. Watch. Okay, I'm going to take the low of that range. So there it is. Now, the 50 level is right there. All I'm going to do is put a line right on that 50. So here's the 0, 23, 6, 38, and 50 right there. Right, so now we have our specific price level right here. It's in the middle of the consolidation prior to that move of these equal highs, which is going to form a buy stop liquidity pool. Now, this first punch up in here, it may take a first layer of stops away. Then boom, hits the specific price level that's outlined as I teach it. This is market structure ICT level. There's a lot of market structure ideas that usually are talked about through like Elliott Wave, which I think is a bunch of bullshit too. And I'm not trying to be disrespectful as much as it may sound. That I know there's people out there that are profitable trading Elliott Wave. But if you studied my concepts, I guarantee you will see an improvement on your understanding of price action, and you'll slowly work away from the Elliott Wave stuff. But right in here, that's where price trades to. Okay, is that random? Hell no, it's not random. Now, once it trades here, it's over. It's not going higher. But when a noob sees this, they're thinking, wow, this thing has gone up. This trend line's no longer any good, so let me get rid of that. So now it's going higher. I'm going to buy this support because, look, here it is, resistance, broken, now becomes support. So now what are they doing? They're buying it. It's going to the moon, baby. ICT's wrong on this one. I can't wait to see how he responds to that tweet. Where's the other side of the market? Well, they ran the buy stops. Who sold those buy stops? Smart money. So how are they going to get out of that position they're in? Because they've offered liquidity to those that want to be using the buy stop to exit their short or use it to be a breakout artist to go higher. Because everything's about the moon for whatever reason. Now the liquidity rests here. Right there. And now we're back in line and in sync with the narrative that whole downside institutional order flow, what's been going on for over a year now in Bitcoin, it's going lower. So the buy stops that have been purchased by the stops on shorts or buying on a breakout for underlying longs, they have been counterparties to smart money looking to sell short. So they sold here. So there's a book made on them offering the liquidity as they would need to be trading shorts with protection. So they've given that mode of efficiency for traders. So they can't complain. They gave them their buy stop. They asked for it. They put their stop loss right above these equal highs. But now the smart money have taken a position by going short here, and they want to see price go below this low and this low and this low. Because otherwise, offering just the liquidity over here, they can't keep a house profitable if they do that. In other words, the common misnomer is the market maker's neutral. Okay, people that believe that have no idea what the fuck they're talking about, because they are means of making a book and offering liquidity, yes. Okay, but that's not what they're doing. They're not making money just primarily on the spread basis of that, and then that's their whole basis and sound profitability. No, They're they're actively participating too. You think they're not going to participate something they're in control of? Think about what you just stated. Think about these people that go on TV or they write books or they go on social media and they sell this stuff. I turn all that stuff upside down every single fucking day on Twitter. It's every single day, clockwork with me. I show it all the time, and it's the same stuff. It's not ambiguous. It's always the same structure. It's 180 degrees diametrically opposed from everything you fucking learn in books. It's as simple as that. You throw the books away. Throw them away. Stop buying fucking books. They're not teaching you anything except for doing the wrong thing over and over and over again. So now that the liquidity has been absorbed, the buy stops have been counterparty to short sellers on the smart money side, the market is free to trade lower. And the market trades lower. Runs quickly to the stops because they don't want anybody getting out. And it runs to this stop and it runs below here. The market's presently hanging around right above this level here. Why is it doing that? Because it's giving traders the hope aspect. They want to see support found here, and they want to see it trade all the way up to 10,000, 12,000, 50,000, 150,000. There's nothing in here stating that that's going to happen. The most probable outcome is going to be it's going to 3,000. Now, why 3,000? If we go back out to a daily chart, on September 15th of 2017, we have a low of 29.75. So what's the round number right above that? 3,000. So 3,000 to me is the draw on price. That's where price on Bitcoin most likely will go to. It's obviously going to have liquidity below that low. So it could be in the form of 2,800. It could be, I like 2,500 because it eats into all of this area in here. Okay, and then we have the strong likelihood that if we get really animated, we could see it run below these lows here. But ultimately, Bitcoin's going to $100. Okay, and like I said, it's not to be disrespectful to anyone. I understand everyone that was making money here, and now you're not. But I told you back here, it wasn't going up. It wasn't hitting 20,000. Go back on Twitter, you'll see it. I even show it to you in chart. I explain it to you in a chart why it's not going to happen, and it's happened ever since then. So hopefully this hasn't upset you too much. If it has, it's not my intentions. It's obviously meant to get you thinking independently and get off of the social media worshiping of nobodies because they don't know what the fuck they're doing. And getting lucky with one of two scenarios that's placed on a chart, that's not prognostication. It's guessing. And until I talk to you next time, wish you good luck and good trading.